Hi everybody, this is Gary dealing with Sentiment Timing, and this is our free weekly video report for Wednesday, September 14th, 2016. Hope you guys are enjoying this wild ride. We finally have some volatility in this market, and it's been a long time waiting, and we've been trying to give you some warning signs without giving away the farm, because we have our paying members that would not be too happy if we were giving all the information out. But you had a pretty good basic idea as far as what Woody saw and what I saw for a couple months now. So we had for the last really say three major crashes, Woody has predicted each one of them, and we had the black hole environment for 2016, and it was here, and we had a lot of people that just took, when I first started saying this in June, that we had a black hole coming, they assumed it was right then. And we got a lot of emails as far as people saying that Woody's wrong, blah, blah, blah. And I really had to explain to them was that the black hole was first identified, and this is the actual, this is the way it all was. So it's not right before the Brexit. So this was we had Woody had said that we had a black hole environment that was coming in August. So we had this big move. So being that you knew that the black hole wasn't coming to August, you pretty much were able to assume that this was going to get bid back up again. Once it started going higher, from the right around August 1st, Woody had identified that the selling's going to pick up after the 15th. 15th was the actual top. And from there, this part right here, this sucked. There's no other way to put it. We had a bunch of false moves to the downside, but the top was never taken out on the 15th. It came close to it one time, and this was frustrating. I'm not going to lie to you. I know Woody was frustrated. I was, because we really wanted a huge move to the downside like we were anticipating, but instead it got more and more people bullish on this market. And I think I showed you this over, I'm not sure if it was a couple weeks ago or whenever, but it was all the emails that I was getting that was giving 2250, 2300, and everybody was looking long, and that's what this consolidation did. It got everybody looking up, and from there we had what he was calling the trap door. So as much as it went a little bit different than we were anticipating, I don't know anybody that's any kind of predictor of the stock market that had mentioned this move or coming in August, in June, and then identifying when the top was going to be 2 weeks before, and then this actually happening. And we're not, the stock market is a stock market, and it's going to do what it's going to do. Now, we try to get an upper hand and be able to predict when things are coming, but they're going to take their own path. Yes, it happened, but it was frustrating in this area, and that's it. But it's more, even though it didn't break down right away on the 15th, you should know that it was not safe to buy, because we were looking for still the sharp drop. Technical wise, we were looking for a drop as well, and from there you just had to be patient on the short side, and eventually this move came. So really the objective of our newsletter and what Woody does is, when you start seeing euphoria like we saw really through July and August, that's when you want to start building your short position, and once things start capitulating, that's when you want to start building your long position. And this is exactly what the institutions do. They'll start shorting at the thrill euphoria, and they start buying at the capitulation, and anywhere, say, the capitulation to the depression type thing, and they catch the middle part, and then from there they just kind of let things go, and that's really what we try to do with members. So when this is something I posted on the 20th, I said we were in the euphoria phase and to start looking short. And again, that was at 2080. The high was 14 points higher, and a month later. So it really wasn't that big a deal as far as being wrong to endure 14 points. That's not even 1%. On the wrong side of the tape. But again, it was, really the time period that it took to go. But in any case, this was the euphoria. And yeah, it went a little bit higher, but that was it. So if you were buying up in the euphoria, you got crushed. You're now down, some 50, 60 points right now. And that's really what we were warning. So on the 12th, which was on Monday morning, we sent out that we had a 1% bullish reading on Friday, so you really do not want to be pressing the short side. That was the message that was relayed before the market opened, and we actually gapped down on Monday, but then from there we saw a massive reversal, and the S&P was up as like some 35 points. But the thing is that we knew that everybody got bearish on this market real fast, so that's where we were saying that argues not to be pressing the downside here. Let's see how it trades tomorrow. So here was the sentiment. We had the 1% after that big rally on Monday. It hit 90%, and you know what happened on Tuesday. We saw them give it all back again, and this is what I mean by this euphoria phase where right now people aren't believing we're only probably right in this area here because you don't get 35-point rallies the next day after a 50-point drop. So people are still anticipating that we're heading higher, and they're buying it, and they're going to panic and capitulate. And when that happens, that's when you want to be buying. And each time that we you were able to buy the low, it was more money to be made than on the downside. It just the downside happens a lot faster than it does the upside. So anyway, we argued that you don't want to be pressing the short side from here at the 90%. Everyone knew before the market, and we saw the S&P drop some 35 points. So let me go over a couple things on the live charts here on what I'm seeing, and I said that there's a pattern that's in play, and you really want to keep an eye on things. Now, this is a weekly chart of the S&P, and the red is the big count. And if you don't know wave counts, it's not a big deal. I'm going to go over this. You don't have to. So you have 1, 2, and then what happens is this wave 3 breaks into 5 waves. So you have 1, 2, 3, 4, 5. Here's your 3. We had a drop, which was 4, and then back up 5. And what that is that's your major one from this high down to this low. So what that means is your typical wave 2s are going to go 38%, and it could go all the way down to 78% and still be bullish because the next wave is going to be your wave 3 to the upside. So it's just this right here, this wave count. It is saying that you have to be really careful because I'm at 1,600 from 2190. That's a huge drop, and we haven't really seen one of those since these lows here. Now, if it starts going all the way down to the 990, which would still fit the wave 2, I mean that's just as bad as, or it's worse than what happened in the during the financial crisis. So this is a warning that even though I don't know when this is going to play out. This is pending, and it's going to come. It's just a matter of when, whether it started right now or they're still got to push higher. We're going to find out. And this may, like I said, it may take a year or two. This isn't something to trade off of. It's just something to keep in mind that this could be a potential targets down the road, maybe in 2017 or even 2018. We'll see. But anyway, the 60-minute chart, you can see we're pretty sold right here. We don't have any bullish divergences because we haven't taken out the lows, but we have support sitting at 2112, and then we also have some at 2101. And then 2092. So right now, there's probably more points to the upside than the downside, but it's not something that I'm comfortable trading. I'd rather just manage the short positions. If we find support and we get a bounce, then step aside, wait for it to top out, and then get short again. But it's not jumping short right now. You stand the risk of this type of move, and you're going to get squeezed out of it, and you're not going to be short for the move that actually happens. So we want to pay attention to sentiment, and we want to just really see what he says as far as when the potential turn dates are coming, and try to position your portfolios. So we are I'm giving out it's going to be $99 for, this is not right here, $99 for 45 days. The coupon code is in there. Anybody that subscribes, we're giving them a free membership to MarketsPath. That's my other website. And what I do is these video reports each night, and I send out some morning notes, and we also have a trade room. So if you're interested, subscribe and you'll get this free membership. And until next week, have some safe trading.